session. So good morning, everyone. And thank you for joining in yet another Saturday morning session, which we fondly call as SMS. Today we have two paramount speakers. So we have here, sorry, one second. So today we have Miss Soumya. She's a ma'am is a chartered accountant with over 10 years of expertise in the field of indirect tax. Her professional background includes handling indirect tax litigation. And apart from that, she also handles SEZ, EOU, and DGFT matters also. She's also a learned faculty, and she's taken seminars, across different, I think, different places and different organizations. She also writes articles, so that is also one of her favorite things to do. So and apart from this, her wonderful qualification is that she's also a member of our faculty group. So she's a part of the faculty family. So our other prolific speaker today is CA A.R. Raghunathan sir, whom we also know as Raghu sir. So he's into the practice of indirect taxation for almost 30 years now. And he's also was a part of the subcommittee of the Ministry of Finance, the Government of India, for the Fitment Committee in the year 2005-6. He is also an active Rotarian and has served as the AG for the year 2015-16 as the District Treasurer for 2018-19. Apart from that, he is also a wonderful faculty for GST by the Indirect Tax Committee of ICAI. And he has addressed various forums for trade, for business, and also for the different associations across the place. So with this small introduction, due to paucity of time, we would go ahead. And today we are going to have a discussion on all the circulars that have been issued. Out of all the circulars, the speakers have chosen 4 different circulars to discuss so that they can give proper justice to the circulars. So over to you, Raghu sir.
Yeah, just
thank you, sir.
Small note. It's 9:02, and I request both the speakers to see if we can wind up by 10. Of course, I'll prompt you at around 9:45 and 9:50 so that you can moderate the people's discussions.
Sure. Oh, yes. Good morning, everyone, and thank you for the opportunity being given today. It's a real opportunity and blessing, I would say, because I'm a bit nervous also because I'm talking in a group where I see so many experts across overall. By the interactions I have been, it has been really fruitful interaction in the WhatsApp group also. So with this, I just move on to the presentation. First, I will cover circular 209 and 211 is my portfolio. And Madam's portfolio is 2010 and 210 and 212. So I will just move on to my presentation. Just a second. Is my screen visible?
Yes, sir.
Yeah.
But you have to put it in the PPT mode. That's it.
Yeah.
Right.
Okay. So first, circular number 209. Now, one thing which I do not know is whether the circulars are there to clarify or more muddy or confuse the readers of the circulars. So what are the challenges which we will face out of these circulars are also that also we should be looking into. So now circular clarifies in respect of transactions through e-commerce operator in light of new section 10(1) CA of IGST Act. So even though 10(1) CA is a general section applicable across every other transaction, they have chosen to clarify only with regard to e-commerce operator. So para 3 says reference has been received from trade and industry.
Sir, just to interrupt, sorry, we are still seeing that discussion on circulars, the title slide 209 to 12.
Title?
We are only seeing the title slide. The
Oh, sorry, you are not seeing the other things. 1 second.
Yeah.
1 second. 1 second.
Yeah, maybe we can put it into presentation.
No, 1 second. 1 second, sir. Now it's visible fully.
No, whole screen is
No, I
stopped.
think I think I'll reshare it.
Stop sharing. Yeah.
Yeah, I'll stop sharing and reshare. 1 second.
You have already stopped sharing. You have to just click on the green button.
Correct. 1 second. It's not coming in the window itself. One second.
Or you can just WhatsApp to me. I'll put up the presentation.
No, just a second. 1 second, sir. 1 second.
No problem.
Just
No,
saying, otherwise I'll WhatsApp to you. 1 second.
no problem.
In the meantime, while Sir is connecting, so I would like to thank, I on behalf of all the admins would like to thank all the participants for joining in the SMS, because it encourages us to take out on all more important topics going forward.
Is
Yeah.
it
And
okay now?
request others also to be part of speakers panel.
Yes. Yeah,
Is it
Raghu, yeah, now it's visible.
Yeah,
So,
okay.
You can press F5, sir, so that it comes to presentation
Yeah,
mode.
slide mode.
Yeah, is it clear, visible now?
We are only seeing, I think you have only shared a window, not the whole screen.
Oh,
So
okay,
I'm still seeing the first.
Now we can see. Yeah, now we can see.
Now it came to third slide.
Yeah, now you can press F5.
Okay. Is it okay now?
No problem. Go ahead, sir.
Yeah, it's working. Yeah, yes, it's visible.
Yeah,
Yes.
you're seeing. Okay. So the circular clarifies in respect of transaction through e-commerce operator, even though the section is a general one, not pertaining only to e-commerce operator. Still, they have chosen to clarify this because based on the para 3, which says that the trade and industry wanted to know this. In case of supply of goods made to unregistered person, where billing address is different from the address of delivery, especially in the context of supply being made through e-commerce platforms. So this was one issue which they seek to do that. So before that, first we'll see the section itself where the supply of goods is made to a person other than a registered person. That is, the recipient is not registered. The place of supply, notwithstanding anything contrary to A or C. B, the location as per the address of the said person recorded in the invoice issued, and the location of the supplier where the address of the said person is not recorded in the invoice. Now, explanation says, for the purpose of this clause, recording of the nature of the state of the said person in the invoice shall be deemed to be the recording of the address of the said person. So this is the issue, but let me go through the clarification and then I will throw the issues for discussion. So out of clarification required, Mr. A, an unregistered person located in state X, places
Sir,
order.
your slide is not moving. Sorry to interrupt. Your slide is not moving. It is still in the first itself.
Now is it okay?
Yeah, now it came. Yeah,
Okay,
you
I'll
keep
leave it
moving
as
this slide. Yeah.
Yeah, I'll move it in the page. I'll not go for pressing. So located in state X, places order of goods on a e-commerce platform by giving billing address as in state X, but delivery at state Y. What is the place of supply, whether it is state X or Y? So the clarification they are trying to give is shall be the address of delivery of goods recorded on the invoice, which is state Y. So now this is the clarification they are giving, saying shall be the address of delivery of goods recorded on the invoice, that is state Y. Because GST is a consumption-based levy, it is going to be consumed in state Y. They are taking this plea. Now, when we contradict it to clause B, where it says bill to ship concept, it should be the state where the billing happens. That is the person who is ordering it, on whom the bill is raised, and not where the supply. The difference could be, in that case, the recipient or the person who is ordering is a registered person and he will have to avail the ITC. Maybe to enable that, they have that provision. This provision contradicts saying that where it is actually consumed, that is where you have to take it. Then in the supplier, they are also recommending, saying the supplier may record the delivery address as the address of the recipient on the invoice for the purpose of determination of place of supply of the supply of goods. So instead of having bill to ship concept, they are saying that you yourself put, say, Mr. A's name and the state Y address, you put that. No, merely stating the state name alone, whether it is sufficient in an invoice. That again is a question, because if the e-way bill is also required, mere state name is not required, but you need a full address as well with PIN code and other things. So how this clarification is going to help or will cause more confusions is the question. Now for discussion, what I throw is, circular appears not to cover situation where person ordering or recipient are different, or it does so. We do not, because they are only talking about only Mr. A here. There is no Mr. B or C there, B involved. Then the recording of delivery address uses the word may and not shall, so it is recommendatory and not mandatory. Should the supplier also be in state X or can be in state Y or Z? Because e-commerce platform can be anywhere located. So whether that is mandatory, because the circular says only X, we know what happens in the case of audits where we point out the circular, they'll say it should be both in X. So whether it is going to throw more challenges for us answering the audit queries. In case of address verification by any tax authority, see, I have lakhs of transactions where the tax authorities want to really know the genuinity of the buyers, maybe a GST or it could be income tax also. And if no such person is there in the delivery recorded, what will be the consequences? So these are the points which I throw for discussion, a quick discussion on this. Your views, please.
So I am actually told that this circular was required because many people who created the accounts on Amazon, Flipkart, and others, they have created from wherever they are, and they might not be actually residing there. And it was not even mandatory for some e-commerce portals to enter any of the billing details. The subscription is just by email authentication or mobile OTP authentication. So the true consumption is not known because of that person not being there. So hence they choose to say that the delivery address, we will keep it, and they have restricted only this for the e-commerce transactions and not the regular transactions. So if it is a regular transaction, it would continue to the 10(1)(a) itself, and only for the e-commerce transactions, the new thing is coming up is my
no, but the sections clause CA is common to all transactions, no?
No, only e-commerce.
No, it doesn't say so, sir. See, if you see that, it doesn't say so.
Yeah, I also agree. It's a common circular, not specific to e-commerce.
Yes, yes. So this section is common, which overrides A and C. So what happens to B then? Whether B will still be applicable in non-e-commerce situations? Maybe there cannot be a quick answer as of now. Later in the group also, so views can be posted, I think. Because this is going to be a challenge for us if we follow the circular. Other than, I mean, there is no clarity as far as non-e-commerce transactions. So I think we should advise the client to continue to follow what they are following by bill to ship and give full addresses, not go by a CA as such. CA can be a defensive mechanism where something is missed out, and otherwise follow A, B, or C. This is my opinion. Okay, shall I go to the next circular?
Yes, sir. But I'm still thinking this is going to break the paradigm of what the place of supply is. So the circular will now create more confusions, as you said.
Yeah.
Very much. I also believe that the circular is overreaching in a lot of aspects. It
Yes.
completely changes the paradigm as when Gopalji was saying as to the place of supply, and it also overreaches in saying that whatever is required in the law, it prescribes many other things which are not there. For instance, as ARR was pointing out, so just mentioning the state of supply, for instance, whether it's violating of the invoicing provisions 31 and with the relevant rules. So many aspects it overreaches and basic principles. So these are all procedural, at least we can omit it. But it seems to overreach from the basic principle of places of play also. So
Correct.
anyway.
Yeah, correct. So let me go to the next circular, 211. Circular clarifies in respect of availment of ITC as per section 16.4 in respect of services received from unregistered persons and subject to reverse charge. Issues sought to be clarified is department says time should be with reference to financial year of supply. Trade request saying that it should be financial year pertaining to the raising of self-invoice as per section 31(3)(f). So this, there was a dispute between the department view and the trade view. So the circular seeks to come to a conclusion. So they are dealing with section 16(2)(a). ITC can be taken on basis of invoice or debit note. This is the fundamental thing. Second, Rule 36(1)(b), ITC can be availed in accordance with invoice as per section 31(3)(f), self-invoice if RCM under 9.3 or 9.4. So basically, 16(2)(a) and 36(1)(b) are similar or same. Section 16(4), ITC can be taken up to 30th November of following financial year. Prior to 1/10/22, it was up to furnishing of return for September. So now, what is the clarification they are giving? ITC can be availed only on based of self-invoice, because there should be a fundamental document which should be available for claiming the input credit, which satisfies 16(2)(a). So that should be the basis. Then time limitation starts from the financial year in which self-invoice for supplies from unregistered person is issued. If invoice not issued as per time of supply, then interest is paid on delayed payment of tax. So if in 21-22 the invoice was received and I issue it in 24-25 or 23-24, the relevant financial year will be the day in which the invoice was released. But the time of supply will also come into play, and there will be an interest and possibly a penalty under section 122 for delayed invoice also. That can be the consequence. This is what the circular clarifies, saying that yes, you can go ahead. But issue discussed, what about supplies received from registered persons? From a person who is registered but tax to be discharged on RCM basis. Example 5, advocate. See, even though they are exempted, they may go ahead and register themselves overall. So in such cases, or directors in a company overall, where the director, for example, is a chartered accountant and he is having a GST number, but the RCM to be discharged by the company in which he is the director. So these are cases where the circular again throws back these kind of issues, because talking about unregistered, yes, there is also an element of person from cross-border transactions as well. But in this case, where is the issue? But in the case of cross-transfer thing, then again associated persons are there. Then the date of invoice will be the time of supply. That again is there. So whether the self-invoice is required at all, it is another more question which we have to look into. So these are the issues which are coming out. So I throw it for discussion.
Yes, sir. So as far as the distinction between registered supplier and an unregistered supplier, I think the point is to the point you have made it. So this is a concern that needs to be there. So point number one, and my take, if I can, this council meeting, 53rd council meeting seems to have made a lot of changes with respect to 16.4. So one is this particular circular, and with respect to the forward charge, we have again the time limit getting extended to first 3 years. So,
yes.
Yeah. So these two are interesting takes. Thank you, sir.
Yeah. So I think with this, I close my presentation and over to Madam.
One point, sir, I also want to raise here. Sir, if you look at, even though they have not directly mentioned anywhere specifically, but always they are mentioning that self-invoicing is needed and payment is also needed. So they are always highlighting that payment part is very important again to avail ITC itself. And in most of the cases where entity who has missed, even though of a RCM payment of a registered entity, the payment is made only, they have taken the ITC only after making the payment itself. So even though I feel that they have not specifically mentioned that this should be applicable to the register in case of registered person also, but they have highlighted this aspect as well, that payment is also required. So we can consider that in that case also, even if it is an RCM from a registered person, since the payment was not made, so that actually this 16(4) time limit will kick in only after the payment and everything starts from there, then and there itself.
No, the time of invoice is from within 30 days from the date of service, no?
Correct, sir.
Or payment, whichever is earlier.
Correct.
And
Correct.
in
Correct.
RCM, the question of consideration required to be paid for
But
availing ITC is not there.
But point is, sir, in RCM, when we have to at least first discharge the RCM and then only we can avail the ITC. And if
Very
in
true,
some
very
cases,
true. Very true.
yeah,
I agree with that point. So that is where this, but I do not know why they are restricting it only with the unregistered persons and not with regard to registered person
I
also, because there are quite a lot of cases where the department during the audit, they point out that the tax should have been made on the RCM basis and they are asked to pay. So whether, say for
right.
example, it is paid this week, whether we can avail RCM, this circular tries to argue against that, because
So
they
my
say only with regard to unregistered dealer persons.
yeah, Raghu sir, one of the
Yes,
reasons
sir.
that I could find out for this is that the inward supplies from registered persons that is being auto-populated in my GST or 2A or 2B.
Okay.
So I'm aware about it because the registered person is supposed to raise an invoice or a document as per his obligation or liability. So that's
Okay.
why I
Marup, sir,
feel that
that hold goods for current period, sir. But in case of 17, 18, 18, 19, all this period, even there was a genuine confusion. I know one case practically where the accountants were not aware. They are seeing that in the bill it is charged, so they were taking ITC, ignoring any declaration or anything else. And
yes.
now they have paid it later on, sir. They had paid it later on, and there the department is saying that since you have paid late, you are not eligible to take input tax credit, so will be required to reverse the input tax credit. So,
Ramandeep ji, again here for the initial years, we have the GST Council meeting recommendations has come. So
Yeah, for
I think that
16(4).
covers both. Yeah, exactly. I think that
Till
covers
30th.
both reverse as well as forward charge.
Yeah.
So possibly we have to factor that in as well.
So till 2021 we are covered by 16(4) extension.
correct.
Exactly.
Before 2021, this situation why registered person have been kept out is, I think that is the reason that we are aware about it from the data provided by the GSTN or the common portal, so we can make the payment. But in case of unregistered persons, we are not aware because the word used is that invoice or any other document. So in case of some unregistered persons, what is happening? Even the say advocates in remote places, they don't issue any invoice or something like that. So I'm just making a payment to them. They just tell on the phone, "Itna payment karna padega," and we make the payment. So the thing is that once we make the payment, then we don't have any invoice or document, but we are creating a self invoice and making the payment. I think only in those aspects this benefit has been given. Yeah, Venuji wants to say. Yeah, Venuji.
What is the power under which the circular can be issued? There is no change in the law. There's nothing amendment in the sections. How can suddenly they say that the earlier ITC, of course it is beneficial, that's a different story. Now, if that is their interpretation, that means this existed from the day one that this is the this case. Now, if this is being the case, they do not also have a power to distinguish between registered and unregistered. Mere appearing in 2A doesn't make any sense. I was not present to it. I did not see it. I don't know how to see it. I only go by what is the data auto-populated or what is there in my books of accounts. So anything can happen. So I find circular wrong in two aspects. One, they're saying that the credit is available. Second, they're restricting it to unregistered supplies.
Venu sir, I
Very-
disagree because the underlying tax invoice for 16(2)(a) for registered RCM cases is the invoice issued by the other person, not our self invoice. So it has to be reckoned from that date for 16(4) purposes, irrespective of whether we pay or not, because that is for 16(2)(c). 16(2)(a) was always satisfied by the other person's invoice. We could have satisfied and taken credit for that invoice, provided we pay RCM. So they are
The question is,
slightly
if they
saying that
have not issued invoice, that is where I am saying, Uni.
they would have issued the invoice by default.
Many cases I have seen that, okay, I will go by that. So you are saying that it is only because there is self-invoice, then the talk is not from registered and unregistered, the talk is from self-tax invoice.
Yes.
Yes, exactly.
Venuji, what I would like to add is what Uniji said, because if we see 16(2)(a), it speaks about invoice. And when we see Rule 36, for Rule 36, 1B, it is only about 31(3)(f), wherein the supplier is unregistered. Where the supplier is registered, then 36(1)(a) would be applicable. That is the invoice issued by the registered person. Secondly,
The time limit to invoice,
how
the time limit to issue that invoice has lapsed.
I am coming to that point only. Now, how the circular has been issued, if we see section 13, which speaks about time of supply in case of RCM, therein both in both the relevant conditions, there is no specification about the invoice being issued, a self invoice being issued for the invocation of time of supply. If we see section 13, there at 13(1), it is for forward charge. For 13(3), it is for reverse charge. In reverse charge, it is date of payment or any other document issued by the supplier. So therein, for time of supply, there is no specification that an invoice has to be issued by me. Now coming to 31(3)(f), if we see 31(3)(f), it does not provide any time limit for issuance of the invoice. Because if we see 31(3)(a), it says that wherein a new registration is taken, the invoice has to be issued within 30 days. But if we see section 31(3)(f), in 31(3)(f), what they have spoken is, I'm just speaking, a registered person who is liable to pay tax under subsection 3 or subsection 4 of section 9 shall issue an invoice in respect of goods or services or both received by him from the supplier who is not registered on the date of the receipt of goods or services. So in 31(3)(f), they have not provided any time limit within which the invoice has to be issued. So therefore, this circular, what the circular is saying in the hindsight, that since 31(3)(f) is not providing any time limit, and since section 13, wherein time of supply, there is no linking with the self invoice being issued. So these are two different things. One, that is the time of supply when you have to pay. Second, the invoice which you have to issue. So if you have issued an invoice subsequently, even after the time of supply, we would be allowing the credit, because what is relevant for purpose of claim of credit is the invoice issued by me. This invoice is not relevant for section 13, but it is relevant for section 16. And that's why when the circular says that a penalty under section 122 is to be levied because the invoice has been issued subsequent to time of supply, there is no requirement in the law that the invoice has to be issued on the time of supply for RCM. Therefore, to that extent, the circular is going beyond the provision for invoking penalty under section 122.
And will the penalty be automatic?
No, penalty can never be automatic, and it will always be, it is still under dispute that whether the penalty would be for each invoice or for the entire financial year. But in my opinion, since the circular itself and the provision itself is clear that 31(3)(f) does not prescribe any time limit, so there cannot be any levy of penalty for delay in issuance and invoice, because there is no time limit prescribed for issuance invoice under section 31(3)(f).
I absolutely agree. That's why I was also of the opinion that interest for what is prescribed is valid, whereas penalty is overreaching.
So thank you, Raghu sir. I think now we'll move to
Thank you,
Soumya
sir.
ma'am. Yeah, we'll move to Soumya ma'am. So, ma'am, over to you.
Yeah. So in continuation with what Raghu sir has
Soumya ma'am, I
said.
think there is one query by party. Yeah.
Yeah.
Anybody have a question?
Yeah, I had one point to say that if you see section 31(3), it starts with a non-obstinate clause. So which indicates that the self-invoice limits, the normal tax invoice limits may not be applicable to when it comes to self-invoice. So the question is that the act itself gives the clarity that once the debit note, suppose I make a payment for unregistered person and I forget to make the RCM payment, and subsequently after 2 years I make the RCM payment with interest. So if you see section 31(3), it starts with a non-obstinate clause. So if I miss any self-invoice to be generated, and if we make it subsequently, then the normal tax invoice provisions of 31(2) may not be applicable. That way an argument can be built up.
Okay. Yes. Thank you, Sumitji. I think that is one point well taken. I think now we'll move to Soumya, ma'am.
Yeah. So this circular 210 is actually continuation of what we saw in 212. So RCM liability, self-invoice, all those things are further taken to a next level where the recipient is also unregistered, that is the foreign party. So the circular is on import of services from related parties. So the background of this falls, the supply section itself, which says activity specified in Schedule 1 made or agreed to be made without consideration will be a supply. And I relate it to entry 4 of Schedule 1. And further, so what is clarified in this circular is, it is clarified when a foreign affiliate is providing certain services to its related domestic entity. And where full input tax credit is available to the recipient. So the main confusion lies is where full input tax credit is available to the recipient. That let us keep it in one hold. We are going to discuss that. So they're discussing two scenarios: invoice issued by domestic entity, invoice not issued by domestic entity. In both cases, so in the first case, they say any value declared in the invoice as per section 31(3)(f) would be accepted as open market value. And if no invoice is issued by the recipient, the value may be deemed declared as nil. And in the second case, they say invoice is not issued by the domestic entity. The value of services may be deemed to be declared as nil and may be deemed as open market value in terms of second proviso to Rule 28(1). So the second proviso to Rule 28(1), the Rule 28, I'll just reiterate that it is for valuation for related party transaction. So second proviso to Rule 28(1) says, provided further where recipient is eligible for full input tax credit, the value declared in the invoice shall be deemed to be the open market value of goods or services. So the only condition is eligibility to full input tax credit. So that we need to discuss, and I'll just go to the next slide.
So Northern operating system is now kind of null and void.
Northern operating system is for 16.4 credit. So we are not talking about 16.4.
No, madam. I'm saying it's like I did then service, import of service, foreign expats are working. I was supposed to pay under RCM. Given that I have not raised an invoice, so liability to raise will not arise.
Sorry, can you come
again? I was also considering Northern operating systems when I was reading this circular. But I just differ in the sense that the principles laid down in Northern operating systems are far and wide. So many of them may apply, but as far as the point of valuation and not discharging the GST liability, ultimately, I completely agree with you.
Yeah, see, I am not saying that there is no levy. I agree that there is levy. The value I am treating, since I have not raised the invoice, the value of supply, I am deeming it as 0.
Absolutely.
Because of this circular. So 199 read with this circular tool 10, we are strengthening the case why import of services I did not pay GST. I am not disputing that it is not import of service. I agree. Northern operating system, I am agreeing that I have imported the service, but the value is 0.
Absolutely. Same thing with respect to corporate guarantee. If you see the council recommendation, it's the same parallel here. They have now said that in the council recommendation as far as corporate guarantee is concerned, the similar principle what is laid down in the circular may also be considered.
Arpitji, I want your views also with this thinking.
Venuji, Northern Operating System, I feel that since now this circular has been issued and it is going for revenue neutrality, that if no amount is charged and it is eligible for ITC, then the nil value shall be considered. So somewhere down the line, the Northern Operating System has been nullified, and also the observation made by Supreme Court wherein they said that revenue neutrality as such does not exist in the law, and they distinguish the two Supreme Court decisions speaking that they were not holding that they were non-speaking. Now somewhere down the line, the revenue has accepted that revenue neutrality exists, and therefore they have held that nil value would also be considered as a value of supply in case Rule 28 is applicable.
I think most of the revenue neutrality, that is one area that is covered. But another area that was happening is that this entire confusion whether that second provision of Rule 28 will be applicable only for the supplier or for the recipient. So once it came in Circular 199, I think this foreign, because this is mainly the challenge was being faced by the foreign IT companies, MNCs, basically because they were using the brand of the foreign company and they were being, given with huge demands for the part of usage of the brand name and also, support services and things like that. So there, the main thing was that even if I'm making the payment under RCM, say I'm making a payment of 200 crores, and what is happening is again, I'm getting a refund of that. So it was just becoming an additional burden for the entire administrative framework. So that was again another thing that was being considered. And apart from that, the third aspect that was being considered by the council for this particular thing is, which was represented by the IT companies, was that when you're saying that, this second provision of Rule 28 is applicable for the suppliers, why can't it be applicable for the importer who is importing the service? So that was the main bone of contention, because DGGI was taking a view that second provision of Rule 28 is only for the supplier when they are making an outward supply. So this actually has clarified that aspect, and also from the point of view of revenue, what challenge they have overcome is the huge refunds they had to process otherwise, because the RCM that were being paid in this aspect, that would again come in the form of refunds only.
Arupji, one thing I was, ma'am, if you can go to the previous slide.
Yeah.
What the circular is saying that any value declared in the invoice issued as per section 31(3)(a) would be accepted as the open market value. What I was seeing and referring to Rule 28 was, supposedly I am a foreign entity, I charge something from my domestic entity. Now the domestic entity is liable to pay RCM.
Yeah.
Whether while generating the invoice, self-invoice, do I have the option to raise an invoice for nil value, or I am bound by what is being charged by the foreign entity from me? Because what I'm seeing is, if we go through Rule 28, it is nowhere saying that whatever has been charged shall be the open market value, whereas the proviso is overriding and giving an exception that whatever has been declared on the invoice shall be treated as the open market value. So if I issue an invoice for nil as a recipient, will that be sufficient, or whatever has been charged by the supplier would be overriding that?
No, here in my view, whatever is charged by the supplier, that will be overriding. Because nil would mean where there is no consideration at all, where I'm not paying. I'll give you a practical case. So I'm an engineering design company. I am designing a lot of engineering equipments for an Indian subsidiary, but I don't charge anything because the subsidiary is very young. It's only 1 year or 2 years old. So I'm not charging anything. So here also department had taken a view that even if you're not charging arm's length pricing and all those concepts, they've gone and they had taken a deemed valuation and they were charging. So in order to nullify all those, arguments, I think it has been said that even if nil is being charged, there is a bill which is being raised with nil, then also it will be considered the consideration to be nil. To nullify all this, because there was this deeming valuation which is also happening. I think that is the view that we have shared with our clients, that if somebody, supplier is providing me with a value for the particular service, I cannot treat it as nil.
But we will come to Rule 28 only when there is no value evaluation.
No, ma'am. Rule 28 is applicable wherein either of the two conditions for section 15(1) is not satisfied, wherein
Yes.
price is the sole consideration and by
Related
recipient supplier not related person. So by default, in case both are related person, it is applicable. When the Rule 28 is applicable, whatever has been charged on the invoice loses its relevance. And we have to go by Rule 28(1), which says open market value, and if open market value is not available, value of supply like kind and quantity. But
Correct.
then the second proviso overrides the main provision that wherein the recipient is eligible for full ITC, the value declared in the invoice shall be treated as the open market value. Now, what is the invoice? Which is the invoice is what I am raising, not what the supplier is raising.
Correct. They have clarified that because it is invoice issued under 31(3)(f) itself.
Yes. That's why if whatever supplier is charging me, that loses all its relevance when supplier and recipient are related person. Purely valuation would be as per Rule 28. Whatever has been charged from me loses its relevance, and since second proviso is applicable if I raise an issue for a nil value, even though the supplier would have charged anything. In my opinion, second proviso would still hold good. Because
Yes,
this
exactly.
circular
The
is very
question-
categorically holding that the invoice should be 31(3)(f), not what has been issued by the supplier.
Yeah. So
Yes,
that's
but-
exactly the question that I raise here, that invoice value issued by foreign entity and self-invoice, should it match? Or it is okay if it is different also?
I mean, in my opinion, it can be different because as a recipient, I would be issuing an invoice based upon Rule 28.
Correct.
No, but if the basis of the self-invoice is the original supplier document, so can there be difference? So that is again something that we need to see.
Yeah.
Because if we go the exact words of the thing, of the circular, where the consideration is nil, I think it has been put.
So, Arpitji, your point is, to put it simply, that consideration is different from the valuation. So what you are paying to the foreign entity is nothing but consideration. The valuation is nil.
Yes.
Yeah. And the underlying
one more-
condition of full input tax credit, what is the meaning of that? Whether will we say that we are eligible to full input tax credit if we do not have any exempt supplies at all? Is it that meaning, or that particular supply what I am doing is eligible to full input tax credit? What is the meaning of the word full input tax credit available to the domestic entity? In what way should we interpret this word?
There is again a huge dispute that has been going on, that whether...
No, my view, Arupji, because we have Rule 42 very specific, T1, T2, T3, T4. So when this transaction is being spoken, it is for supply. So if this supply is a common supply, then this is not applicable. Because it is so possible that most organization might have some exempted supplies. Now, if this is a common supply, that rule will not be applicable. If this is a specific supply, then definitely this rule would be applicable. So I might be doing an exempt transaction, but still I will be with this rule. That's my view.
What is suggesting is for second provision to Rule 28, we should check for the transaction and not for the entire financial year, whether ITC eligible or not.
Yeah, I think what Venu say, it's quite correct. I think it makes sense. And we need to see each of the transaction. For example, using brand name, outsourcing manpower, it may be for the company as a whole. So we need to see for each of the transaction whether full ITC is available or not. And based on that, we need to decide whether rule valuation under 28 to proviso 2 will be applicable.
So say, taking this example, say if it's for GKV Optical, okay. So typically, if it is for the usage of the brand name, it will be a common credit, right?
Yeah, it will be a common credit.
So in that case, I'm not eligible for this.
Correct.
Arupji, think of a situation like HLL Unilever.
Yes.
All right. Now, which is a brand used for multi products, So it is a common thing. Okay. Now
Yes.
think of a hospital which is doing an exempt supply services. The parent also have an educational institution which is
Right.
running under different brand, online education, whatever. Now, services specific to that is specific to a taxable entity. So even the brand names can also be sometimes generic, sometimes specific.
Yeah, if the domestic entity is only in one service and the brand name is exclusively used for that service alone, then I think full ITC will be available because that is the only supply they are engaged into. And so the criteria is to check whether it is a common supply or a specific supply to which the payment is made.
Yeah, it's a cross supply, correct.
Yeah.
So any other views on this?
And sir, this is Gaurav from Ahmedabad, Arup sir.
Yeah, Gaurav ji, boliye.
Sir, basically when we say the ITC is available, we whether reversals are applicable under rule 42 or 43, we first take the full ITC and then calculate the ratio and then do the reversal. So as per me, full ITC should be available even where
No,
there's an
sir, no,
exempt supply.
Gaurav, we will segregate the common ITC. The reversal is only on the common ITC, not full ITC.
Agree, sir, but that ITC we take full and then reverse. So ITC was anyway available.
No. See, that is, we are talking from Form 3B perspective. Look at from...
No, not 3B perspective, sir. Not 3B, sir, exactly. See, what we do is we basically, like when Arup sir says that it is quad transaction, I was eligible for the ITC. And even for rule 40 to 43, what it says that if I have to do the reversals on a monthly basis in the 3B, and then 42.4 says that I have to also do an annual matchup.
Yes.
I have to do a true up of all the reversals. So that we don't know when we are taking the ITC. So that is not known at all.
That is what I am saying. So when you say it is not known, where are you parking? Then you are parking in C2. So whether you are parking in T4 or C2 matters whether the proviso to Rule 28 is applicable or not.
No, sir, it's not about C4 or T2. Basically, it's like it's a common pool. We know they'll be exempt and taxable, but we don't know the ratio. So there we take the full ITC and then reverse in the ratio.
No, sir. Ratio is never applied to the common pool. Never applied to the total ITC. Ratio is applied only to C2.
Right.
So whether this credit you are talking is it in T4 or C2?
My only point is, sir, that once we take the full ITC of say 100, will I be able to reverse 5 or 15 or 25 as the case may be? So once otherwise, what you say, we should not be taking that 5 first in place. If the invoice is for 100, we should take ITC of only 95. That is not the case. We first take 100 and then reverse 5.
Even dealt with in circular 199 when they talked about distinct entities and ITC being not available and available, where they told about the internally generated services and third-party services. So they have told very clearly there also that if it is a common supply, then ITC is not available. In those cases, we cannot apply this 28. So
if you go through section 16 subsection 1, which speaks about eligibility, and it speaks about the eligible amount shall be credited to the electronic credit ledger. Now rule 28 sub rule 2 eligible for full ITC, so we would be taking the scope of the term eligible from 16.1, that is what is the amount which is being credited to the electronic credit ledger, irrespective of the fact that how I reflect in 3B, the eligibility, only the eligible amount is credited to the electronic credit ledger vis-a-vis section 16 subsection 1. So in my opinion, what Venuji has said, that if I am eligible for full credit qua the supply, yes, rule 28 sub rule 2. If it is parked in common credit, then rule 28 sub rule 2 would not be applicable. Proviso would not be applicable.
Actually, there is if you see 16.1, it says about availment of credit, and 17.2 notwithstanding says restriction on credit. So point is, at what time the full ITC is to be seen, 16.4 or 17.2. So there is on the basis of what is availment and what is the utilization restriction. First comes availment and then is the restriction. We have actually, I had this discussion with one of the senior advocates. I am finding that there are instructions given where there is a partial credit also. This rule proviso can be applicable. That is the stand some clients are being advised to, and this is a point of litigation whether this full ITC has to be taken considering 17.2 or not, or one has to rely only on 16.1. This is what I have also observed.
Yes. Lawyers
The only
come
thing
to know.
The only thing is that if we take this that we are availing full ITC, then we are reversing in 4B. Then the second proviso it loses all its relevance, because as of today, even if the ITC is not belonging to me, still I am reporting in 4A5 and then reversing in 4B1.
And moreover, another argument that we are taking here is that the post-facto event, like today, I'm not making any exempt supply, but maybe 6 months down the line, I'm selling some securities or shares for which is becoming my exempt supply and for which I have to reverse. So can I have control over future events when I'm doing a valuation today? So that is again another argument that we are taking here, while taking the benefit of second proviso to Rule 28. Mainly till now we have taken this argument from the side of the suppliers. So maybe the same argument can also be taken from the importers, though it's the aggressive stand.
But sir, I will agree with Arupda's stand here, sir, that once we are not aware, but take an example, some people do a square up of transaction in March, so that they just book a profit or loss, and that is they're liable for Rule 42 reversal on securities at 1% rate on the value. Then the entire year will go down the drain, sir. Is that true? Is it what you are trying to say?
Yes, so that
because when I took the ITC, there was no intent, it's not aware that something of the sort will happen in March. So the entire year's ITC of a common nature will be dragged by the valuation rule, that he will not be able to take ITC on that. Circular.
So that's why we're taking, RPG has rightly pointed out, no, on the word eligible, we are paying a lot of stress. But surprisingly, if you see in the circular, they've used the word available. Yeah, available in the ITC is available, not eligible. Though they mentioned about second proviso to Rule 28, they said there is ITC is available, then you can take this benefit. There is a drafting error somewhere.
So RPG between available and eligible.
अभी भूख नहीं मेरे को 10 मिनट बाद खाऊंगा
Some crosstalk, I think we have to mute. It's also 9:53, Soumya madam.
So we'll quickly move to the next circular, very simple circular. On post sale.
Arup bhai, can you mute others?
Yes, I've done it. Yes.
So the next circular, a very straightforward, simple circular 212 on post sale discounts and the tax credit on tax credit note. So the background for this is section 15.3 itself, which says that value of supply shall not include any discount given subclause B says after the supply has been affected. If it is at the time of supply, that was clause A. Clause B is on after the supply has been affected, and subclause 2 says input tax credit attributable to the discount on the basis of document issued by the supplier has been reversed by the recipient or not. So the valuation, the discount will not be included in the taxable value only on satisfying condition specified in subclause 2, which says that the recipient should have reversed the credit. But there is no way representations were made to the ministry that there was no way to check whether the recipient reversed the credit or not by the tax officer or by the the supplier, and therefore there was no mechanism even on the portal to make such a check. So they given a stopgap arrangement that till automatic recognition is made possible in the system, the supplier may procure a certificate from the recipient of the supply, certifying the recipient has made the proportionate reversal of input tax credit to the extent of the tax credit note issued. And if it is above 5 lakhs, a CA certificate is also to be obtained. This more in line with the circular 183 and 193, which they gave for 2A, 3B. So similar such thing they have given. It's only a stopgap arrangement. Maybe they are working in the back end to make sure that, this is also reflected on the portal to ensure there is no leakage of tax on account of these discounts being given and supplier reversing the liability at his end.
Madam, I have a couple of points.
Yeah.
Firstly, where do they have powers to say that, okay, you have to obtain one CS certificate or certificate from the recipient? There's nowhere in the act or in the rules.
No, that's what
Second,
15B, B32 says the same thing, no, sir. Input tax attributable to the discount on the basis of document issued by supplier has been reversed by the recipient. So how do we know whether he reversed or not? So that is the thing we don't know, even department don't know. So the basis
so
comes
now
from
this is like a C
15B2
form.
itself.
So this is like a C form. So for every credit note, there should be an underlying declaration.
That is what they are insisting.
But the issue is that once I have reported in one as a supplier, my responsibility should end because it's a responsibility of the recipient to claim the credit what is appearing in 2B. And this is putting an unnecessary burden on the supplier. Yes, there is a condition in 15.3b2, but then it has to be something which can be fulfilled by the supplier to the extent it is possible for him.
Yeah, because he is going to go down on his liability, and therefore department wants substantial evidence that the recipient has also not claimed and he has also not paid the tax.
It should be the responsibility of the jurisdictional office of the recipient to see that whether he avail credit beyond his 2B. If I have reported in my GSTR1, they are absolving all the officers from all the liabilities and putting all the responsibility on the supplier. And further, this circular is going one step ahead than what was there in 183, because it is speaking about reversal either through DRC03 or through returns. Whereas for 183, it was only considered to be from 3B only. There is one extension which has been made in this circular.
Arpiji, that is a favorable thing for us. Because this is again a challenge that we are facing. Suppose what has happened during audit, I have reversed all the credit notes that I have received from the suppliers. Like I have shown in my 9, and then I have reversed it separately and shown it in DRC03. That these were the credit note received from the supplier that I am reversing. So that is somewhere they were not accepting. They are saying, where is the matching? Why did you do it in 3B? You should have done it in 3B, then only it will be allowed. A white through 9 and all those things are there. So I think that is one welcome move, that even if through DRC03 have made the payment, that will be accepted here. Or else that argument was taken. Then why didn't you do it before?
I want to know, in 3B, is there a separate line which says credit note reversal, tax credit reversal on account of credit note? There is no separate line for that, right now?
No, ma'am. Regarding this, there was a clarification in January 23. No, see, when July 22 circular came, they said that credit note received from supplier has to be reversed separately under permanent reversal. Okay, that was the first time this discussion started. Because prior to that, we were taking this argument that where in 3B have you given me the disclosure to make that I have reversed the credit note received from the supplier? You have not given me any place. So I'm not showing it. I'm showing either the net off or I'm showing it on the other reversals. So then again, they said, you prove that you've done a net off, give everything detailed. So now they had come in July 22 when the new thing came, 4B1, 4B2. They said that all credit notes received from the supplier, they have to reverse under permanent reversal. But again, there was a challenge with that you cannot show it in a permanent reversal. So again, in January 23, there is a new instruction coming in and saying, no. Credit note from suppliers, you can show the net off by reversing it in 4A5 only. So that is the only clarity that was there. So that is there. But this particular thing, 15.3b2, it has come because there is a term that what you cannot do illegally, you have to do legally. So what was being asked till now from the department is that show me evidence that your supplier has actually, your recipient has actually reversed the credit. And we had taken this ground that how can I go to 340 suppliers, recipients, my distributors, get a certificate from them, that each of them will say, yeah, I've reversed the ITC. And they have so many suppliers also. Why do they do it for everybody? So since we were taking all these grounds and taking all this plea, I think this is being brought directly that you do it. But as Sujata ma'am rightly said, this has come through a circular. This will only be valid when it comes through a rule. That in compliance of 15.3b2, we have to furnish such a certificate, if at all. But trade is actually heavily concerned with this, and we have already represented from 2 trade forums last Friday itself. So I think all trade forums across India, we should go ahead with this. Though this is a wonderful professional opportunity for chartered accountants, so it's a wonderful professional opportunity, but it's going to bring in a lot of hassle in terms of timelines.
Arup sir, don't you think that this provision, the circular which they're trying to bring
It's
in,
10
is
o'clock.
taking us back to the VAT era? Because during the VAT regime, the credit notes were not reported in the returns in line item wise, and therefore they were required to make a confirmation. But now the tax credit notes are actually reported in GSTR 1.
Right.
So it is actually redundant. I don't know why they are going back 7 years.
So, but again, we have to go with the clock. So it's already 10:01. So Soumya ma'am, your final views on this before the closure.
Yeah, I think that as you said, as Sujata ma'am has already pointed out, that unless and until it becomes a rule, I don't think it is possible to enforce based on the circular. So let's see, and what are system changes are being made also, because they are going in rampant ways in modifying the system according to the loopholes which are there. So we'll have to wait and watch. Yeah.
So thank you very much, and to all the participants. So Arpit ji, the vote of thanks from your end for both the wonderful speakers.
Thank you very much to both the speakers for covering the circulars for the benefit of all the members. And as I always say, that the discussion which is being held in the SMS is really surprising, and the level is really very high. And the credit goes to the speakers for bringing the thought-provoking points and putting them before the members, and all having a unbiased and a free discussion on those issues, because whenever we have a discussion, new points arise, and those new points are such points which we do not find in normal seminars or sessions. So it's always a benefit and a privilege to attend the SMS and see wonderful speakers attend, sharing their insights on the amendments made. Thank you to both the speakers for sparing their time out and raising very interesting issues during their deliberation.
Thank you, Arpit. Venuji, your final words before closing the meeting today.
No. So final words are always by Arpit Bhai. I would only again urge two things. One, attend the SMS regularly. Second, be the speakers of the SMS. So our knowledge only grows when we share the knowledge.
And
thank you, everyone.
And Venuji, being a person who is attending the SMS gives me so much knowledge. So being a speaker would be giving something else.
Very true.
So thank you very much. Thank you, and thanks for volunteering also. So as Venuji has rightly said, let us all come forward and share our insights on the particular topics. So looking forward to meeting all of you next week when we'll continue with the circulars. Thank you very much, and have a wonderful weekend ahead. Thank you.
Thank you. The session will be uploaded soon. Thank you.
Yeah. Thank you.